Think about the sheer power Japan has held in global financial markets for, well, centuries.
Absolutely. A major force.
And what's truly fascinating is that for a huge chunk of that time, they were using this unique method of technical analysis candlestick charts.
Right.
And it remained almost completely unknown outside Japan.
Yeah, like a hidden technique, almost.
Exactly. Imagine this sophisticated tool honed over hundreds of years, a potential secret weapon,
Yeah.
right under the noses of Western traders.
It really makes you wonder, doesn't it? What kind of insights were they getting? What edge did that give them while, the West was using bar charts and point and figure?
The longevity, the initial exclusivity, it says a lot.
It definitely suggests they were onto something valuable.
And that is precisely what we are diving into today. Our main source is Steve Nison's, well, seminal work, Japanese Candlestick Charting Techniques.
The book that really broke it open for the West.
Exactly. So we're going to explore the core logic behind these visual patterns, uncover their surprisingly deep historical roots.
Which are fascinating in themselves.
Totally. And understand why they eventually kind of took the global trading world by storm.
Yeah.
Because this isn't just about pretty colorful charts, right? It's about understanding the psychology driving market movements.
Getting a feel for the battle between buyers and sellers in a very immediate way. Something traditional analysis might miss, perhaps.
Understanding the toolkit of such a dominant player, Japan, that's always valuable, isn't it?
For sure. The fact they relied on these distinct techniques while being such a financial powerhouse, well, it suggests a real advantage.
Nison's book basically unlocked that knowledge,
Like-
made it accessible.
Yeah, he bridged that gap.
So let's talk about Steve Nison himself for a sec. He wasn't some, academic in an ivory tower.
No, he was in the trenches, right, a futures technician.
Exactly. And the story goes, his interest was really sparked by a suggestion from a colleague, Bruce Comich.
Ah, the power of a good suggestion.
Apparently, Bruce was full of ideas, and it was that nudge that led Nison to write this book.
Makes sense. Sometimes it just takes someone else to point you in the right direction.
And think about this. Before late 1989, candlestick charting was incredibly niche in the U.S. Super obscure.
You probably couldn't find much on it easily.
Right. Nison says you could maybe name the providers on one hand, but after his book,
Boom. It just exploded.
completely, suddenly everyone's talking about hammers, dojis, engulfing patterns.
It clearly filled a need, or at least a massive curiosity in the market. That rapid adoption really underscores the impact.
Which brings us directly to you, our listener.
Yeah, why should you care about this?
Well, whether you're just starting out in trading or investing, or you're, a seasoned pro.
Doesn't really matter your experience level.
Right. This book, these techniques, they have something to offer. Nison is super clear, though. They aren't meant to replace your existing tools.
No, it's not about throwing out everything else.
It's about adding another layer, giving you what he calls an extra dimension of analysis.
Supplementing, enhancing what you already do.
And to make it easier, he even included a glossary. Translates both Western and Japanese trading terms.
Which is really helpful because some of the Japanese names for patterns can sound a bit strange at first.
Definitely. So the promise of the book, essentially, is that it will enlighten your trading, help you spot signals that might be, well, invisible on a standard bar chart.
And that flexibility is key, I think. A beginner can grasp the basics, the visual patterns, while a more experienced trader can weave them into, complex strategies involving oscillators or moving averages.
The glossary just makes it easier for everyone to get on the same page, breaks down those barriers.
Exactly. Making these powerful tools accessible.
So what's our goal for this deep dive, then?
What are we trying to achieve here?
It's pretty straightforward, really. We want to pull out the essential wisdom from Nison's work.
The core ideas.
Yeah, to help you understand its power and how it can be practically applied even today.
Think of it as maybe getting the key takeaways, the highlights.
Your shortcut, perhaps, to understanding a really vital technical analysis tool.
Right. Equipping you with that foundational knowledge so you can see how these visual patterns,
These candlesticks,
can offer unique insights into market sentiment, into that push and pull, and maybe enhance your own decisions.
Okay, so let's talk about the flexibility and power a bit more. Nison really emphasizes that these techniques are meant to supplement existing tools.
We mentioned that, but it's worth repeating. It's not candlesticks or Western techniques. It's candlesticks and Western techniques.
Right. He structures the book clearly. Part 1 is all about the individual lines and patterns. There are over 50.
Wow, that's a lot to learn.
It is, but part two is where he says the true power lies combining them with Western methods.
The synergy. That makes sense. Multiple signals pointing the same way is usually stronger.
He also addresses the subjectivity issue. People say interpreting patterns is subjective.
Which it can be, yeah. Just like interpreting support and resistance levels or trend lines in Western analysis. There's always some judgment involved.
Exactly. Nison acknowledges that, but says his definitions are chosen to increase the probability of a correct forecast. It's about playing the odds.
They aren't magic, not infallible, but they add, as he puts it, vibrant color to your technical toolkit.
I like that. Vibrant color. It gives you a richer picture.
Definitely.
Now, a huge part of this is the psychological element. Nison outlines 5 reasons why technical analysis is important. The first is the psychological component.
Yeah. Markets are driven by emotion, right? Fear, greed, hope.
He even quotes Keynes saying a purely rational investment policy is disastrous in an irrational market.
Which feels true sometimes, doesn't it? It's like money itself only has value because we all agree it does. That's psychology.
Great point. Second, technicals provide discipline. They help you set objective entry and exit points, manage risk.
Take some of the emotion out of it, stops you from chasing or panicking, hopefully.
Third, even if you don't believe in technicals, enough other people do that they become a self-fulfilling prophecy sometimes.
They become a market-moving factor in themselves. So you have to pay attention.
Fourth, he counters the random walk theory. People remember past prices. That memory affects future decisions.
Yeah, that high or low point sticks in your mind. It influences where you might buy or sell next time.
And fifth, objectivity. Technicals help you see the market as it is, not as you want it to be. Prevents you from just seeing news that confirms your bias.
Seeing the price action itself without the narrative overlay can be very clarifying.
Okay, let's dive into the history a bit because it's fascinating. Munehisa Homa.
The legendary rice trader from the 18th century.
Yes. Considered one of the first, maybe the first, real famous users of past prices to predict future ones.
This was during a time when Japan was unifying, commerce was booming.
Yeah.
Late 1500s to mid-1700s.
Hama came from a wealthy family, managed their assets apparently because he was the sharpest, market-wise, even though he was the youngest son.
Had a knack for it. And he traded at the Dojima Rice Exchange in Osaka, which was the center for rice trading.
He had some serious advantages, too. His family's rice estate gave him inside info. He kept detailed weather records.
Analyzed historical rice prices going way back.
And even set up this communication system using flags between Osaka and his hometown Sakata to get news faster.
Wow. Talk about information arbitrage back in the 1700s.
He apparently dominated the Osaka market, then went to Edo, modern Tokyo, and did well there, too. Rumor has it he had 100 consecutive winning trades at one point.
100. That's legendary status right there.
Yeah.
There's even a folk song about him.
Yeah, showing how influential he was. He later became a financial consultant to the government, got a samurai title.
Quite the career arc.
And he wrote books Sakata Shinho and Sobasani no Den. These are seen as the foundation, the ancestors of modern candlestick methodology.
So the principles have deep roots.
Absolutely. Now, let's touch on some key candlestick concepts. The opening and closing prices are hugely important in Japanese analysis.
More so than perhaps in traditional Western bar charts sometimes.
Nison calls the opening the rudder of the day. It reflects all the overnight news and sentiment. There's even a term, morning attack, for big trades right on the open.
Sets the initial tone. And the close. That's critical too, right? For margin calls,
yeah,
technical confirmation.
Totally. And there's a night attack trying to manipulate the price right at the close. Shows its importance.
So open and close carry a lot of psychological weight.
Big time. Another key idea, reversal patterns versus trend change patterns. It's a subtle distinction.
Right. Reversal pattern sounds like the trend is definitely going to flip 180 degrees.
But Nison says that's a bit of a misnomer. It signals a likely change in the prior trend, but it might just go sideways for a while, or even resume the old trend after a pause.
He uses a car analogy, I think. Hitting the brakes doesn't automatically mean you're putting it in reverse.
Exactly. You might just slow down or stop. So an uptrend hitting a top reversal pattern might lead to a downtrend, or just sideways chop, or a brief dip before going up again.
So confirmation in the next session or two becomes really important.
Crucial. You need to see follow-through.
And always trade in the direction of the major trend, right?
Yes. If you're in a major bull market and you get a bearish top reversal signal, Nison suggests it's probably a signal to liquidate your longs, not necessarily to jump in and go short against the main tide.
Context is everything. Use the signals in alignment with the bigger picture.
Okay, let's briefly mention a few basic patterns just to give a flavor. We can't cover all 50.
Just a taste.
Hammers and hanging men. They look similar. Small body, long lower shadow, but context matters. One appears after declines, hammer, potentially bullish, the other after rallies. Hanging man, potentially bearish. Confirmation needed.
Engulfing patterns bullish and bearish. A big candle that completely engulfs the prior, smaller candle's body signals a potential reversal.
The piercing pattern. After a downtrend, it gaps down but then closes strongly back up into the previous day's black candle body. Shows buyers stepping in.
Morning and evening stars. These are 3 candle patterns. Think of a star separating 2 larger candles. Morning star is a bottom reversal signal, evening star a top reversal.
Like planets marking a turn. There are variations too, like with a doji in the middle, morning evening doji star, or the abandoned baby, which has gaps on both sides of the middle candle. Very strong signal.
Shooting star. Looks like an upside-down hammer at the top of a rally. Potential bearish signal.
Harami means pregnant in Japanese. A small body candle completely contained within the prior large body candle suggests indecision, a potential truce or trend change. Harami cross has a doji as the small second candle.
Tweezers, tops and bottoms. 2 candles with matching highs, tops, or matching lows, bottoms. Shows resistance or support holding.
Belt hold lines. A candle that opens at one extreme, low for bullish, high for bearish, and then moves strongly the other way all day.
Upside gap. 2 crows. Bearish pattern after an uptrend and upward gap, followed by 2 descending black candles.
3 black crows. Also bearish, 3 consecutive long black candles closing progressively lower after an advance. Ominous sounding.
Counterattack lines. Opposing colored candles that close at the same level. Signals the trend might be blocked or meeting strong counter pressure.
Windows, that's the Japanese term for gaps, they act as support or resistance. The Japanese often believe unfilled windows suggest the move will continue.
Rising and falling, 3 methods. These are continuation patterns, suggesting the trend will resume after a brief pause.
Doji, we mentioned it. Open and close are the same, or very close. Huge sign of indecision. Especially significant after a long white or black candle or at potential turning points.
Shows equilibrium between buyers and sellers. Could mean the previous trend is losing steam.
Now, we mentioned part 2 of the book is about combining candlesticks with other tools, the rule of multiple techniques.
Yeah, Arthur Scalari's idea, Nison references it. Basically, the more technical indicators that line up at the same price level, the higher the probability of your forecast being right. Confluence.
Makes total sense. So Nison shows examples combining candlesticks with, well, pretty much everything.
Like support and resistance levels.
Yep. Trend lines, retracement levels like Fibonacci.
Classic.
Moving averages, simple, weighted, exponential, dual moving averages, golden crosses, dead crosses.
Standard stuff, but seeing how candlesticks confirm signals there is useful.
Oscillators like RSI, stochastics, momentum, looking for divergence too.
Volume and open interest, how they confirm or contradict candlestick signals.
Even Elliott wave and market profile.
Wow, he covers a lot of ground.
And even options using candlesticks to gauge volatility changes and hedging.
So it really is about integration. No single indicator is perfect.
Exactly. Confluence provides stronger signals.
Okay, let's circle back to some practical applications. We mentioned stops earlier. Critical for risk control.
Yeah, Nison's military analogy. Every trade is a battle. Plan your retreat with a stop loss.
Good advice. And those upthrusts and springs for trading ranges.
Right, those false breakouts. He shows how combining them with candlestick signals near resistance for upthrusts or support for springs can give you good entry points in non-trending markets.
Trading the edges of the range, basically, but with confirmation.
And that change of polarity principle, old support becomes resistance, old resistance becomes support.
That's a core technical concept.
And Nison shows how candlestick patterns often pop up right at these flip levels, giving you confirmation that the level is likely to hold in its new role.
Adds weight to the level. And he talks about the psychology of it too, right?
Yeah, the emotional attachment people have to their entry price. Lots of volume at a certain level makes it psychologically significant, reinforcing it as support or resistance.
Makes sense. But again, the caution.
Yeah.
Don't blindly follow signals against the major trend.
Always the caveat, trade with the main flow.
Okay, let's peek behind the scenes of the book again. The acknowledgments.
Right, Nison's humor shines through, describing writing them as having ice cream after a tonsillectomy.
A well-deserved treat after the effort of writing the book.
He gives huge thanks to Bruce Comminch again, not just for the initial idea, but for constant encouragement and getting him involved with the Market Technicians Association.
Shows the importance of mentors and colleagues, that community aspect.
Definitely. And he credits the team at the New York Institute of Finance, the publisher.
Guiding a first-time author through the publishing maze.
Says they had patience and expertise. It's a good reminder that these things are often a team effort.
Absolutely. Editors, designers, publishers, they play a huge role in bringing a book like this to life.
And just quickly, the formalities, that declaration of principles about copyright at the start.
Standard legal stuff. Protecting the work. Necessary detail.
So, wrapping up our initial look at Japanese candlestick charting techniques,
Right.
it's clearly way more than just a pattern catalog.
Oh, yeah. It's a blend of Eastern market philosophy, centuries of observation, combined with Western analytical rigor.
Brought to the West largely by Steve Nison, thanks to his work and some helpful nudges.
Provides practical, actionable insights, offers this unique perspective on market psychology.
That was once essentially a closely guarded secret of Japanese traders.
The main takeaway, I think, is the potential to really enrich your understanding of market dynamics.
Yeah, adding that visual language.
Exactly. Seeing the ebb and flow of buying and selling pressure, appreciating the emotional drivers, it adds depth.
Okay, final thought to leave people with. Considering this powerful synergy, this blend of Eastern wisdom and Western analysis and candlestick charting, what other seemingly disconnected fields might hold surprising insights if we combine them? Could ancient philosophy inform modern finance? Could biology offer models for market behavior?
That's a great question. Cross-disciplinary thinking.
Yeah.
Looking outside the usual silos, you might find really innovative ways to understand complex systems like markets. It's about pattern recognition across different domains, maybe.
Something to ponder. Anyway, we absolutely encourage listeners to check out Steve Nison's book itself, Japanese Candlestick Charting Techniques.
Definitely. To really get the full picture, all the patterns, the nuances, the detailed examples, you need to go to the source.
We've only scratched the surface today.
There's so much more depth in the actual book. It's worth the read if this topic interests you.
And please do check out our show notes. We'll have the title, Author, Key Concepts.
And we'll try to reference those specific exhibits Nison uses that we mentioned so you can look them up.
Right, and a link to grab the book if you want. And as always, send us your questions, your thoughts on candlesticks.
We'd love to hear how you use them or what you think after this discussion.